Hi, I am HP Singh, Chairman and Managing Director of Satin Creditcare Network Limited. It's an NPSC MFI.
So, HP, help me understand the business of Satin Creditcare. You said it is an NBFC MFI. Can you break down these jargons for people who are not from the industry?
When I said this is NBFC MFI means that we do microfinance business in India.
Hmm.
It's a category which has been created by Reserve Bank of India. It's kind of we get a license basically that we do microfinance. So it's microfinance loans, which we generally give to rural women in India. Uh, these are productive loans, means they whatever loans we give actually generate some income for the borrower as such, and that is the reason why these are called productive loans. We don't give loans for any kind of a consumption. This is related to majorly the agriculture and agriculture allied activities. It could be dairy farming, cattle rearing, farming as such, vegetable vending, and any anything which is related to agriculture to the most part, and that is what we give credit for this kind of activity.
How
And
is
sorry.
microfinance different from, say, a company which gives out a two-wheeler loan?
Two-wheeler is an asset class, so when you're giving out a loan for a two-wheeler, that means you're acquiring an asset. Over here, there is no acquisition of an asset. It is just for your need of uh, developing your business or making your business run far more smoothly with more credit coming in, so that it actually enhances your income generating capabilities. That's the
Okay.
difference between
Okay.
two-wheelers and this.
I want to understand the term microfinance. Technically, is it only referring to the ticket size of the loan, that these are small ticket size loans? That's it, or is there some other difference between an MFI lender and a regular lender?
Uh, I think this used to be there a long time back. That it was curbed at about 50,000 rupees, maybe in the ancient days of ours. When microfinance was
Okay.
just had started. But now
Hmm.
it's more related towards about the income generation. That is part one. Secondly, what we look at, there are certain set of rules which RBI has conditioned, as you can give only this much of a loan. uh, there will be these many lenders. There will be technically, this is the monthly EMI which probably should be there, and the household income which should be there. So these are special categories which fit into a microfinance loan. So this is depicted basically by these kind of nomenclatures, before we actually say that this is a microfinance loan. So that's the where the difference lies.
So you have a license of a microfinance institute. Is there a
Absolutely.
benefit of having that license versus lending without that microfinance license? Because there are all types of NBFCs. Many of them may not have a license, but may still be giving a productive loan, may still be giving a low ticket size loan. What does that microfinance license or that tag give you? Like, does it give you lower cost of funds, or what? Like,
Uh, I think the beneficial thing which is attached to doing microfinance is, if you look at the entire environment of the microfinance institution, they are primarily lending in the rural space. So uh, let's say our company, we've got about 78 to 80% of our lending which is happens in the rural space. Now that is probably one of the key benefits across, when you say that you're doing microfinance. The second, as a model, this actually gives loans to rural women in the larger frame of things. That is one of the key aspects when you give loan to women. It actually relates yourself to doing women empowerment, not only in just terminology or words, but this is actually giving empowerment to women. Secondly, I think it really helps also developing some form of financial inclusion to a larger space. Thirdly, I think which is also very key to this whole gamut of doing microfinance for women, is that you actually make financial literacy possible. Even in the rural landscape. And that is also one of the key reasons why microfinance benefits such a large I think constituency of things which you're really able to do by doing women empowerment, helping rural businesses, thirdly looking at financial inclusion in a larger space, and fourthly, as I said, so basically it really helps these businesses grow up and look at maybe enhancing your capability of generating more income.
So, other than, so one is, you're saying that microfinance institutes have, from an impact point of view, there is a net social good. But other than that, is there any difference? Like, do you get funds at a lower cost? Do you get any other benefits of being a microfinance institute? Are there any kind of uh, structures created to enable microfinance institutes to thrive uh, from a regulatory standpoint? Like,
See, if I talk about cost of funds, I don't think so that we can any kind of a benefit in terms of we get lower cost of funds just because we do microfinance. Uh, Even though the category when the banks lend to us, they enter into a category which is which they probably have to do it as part of their statutory obligations. The
there is a requirement of
priority,
priority sector
priority sector.
lending.
Yeah, yeah. So it
Okay.
does enter that category.
What is that
It will
requirement? How much of a bank's book should be priority sector
Normally, I
lending?
think about 40 odd percent, is what
40%.
priority sector
Okay.
should be
Okay.
there. But then there are other categories also like export credit and everything, which also comes in that
In
priority
priority
sector.
sector. Okay. Okay.
But yes, it does give us an advantage that for us, probably the flow gets a little better from these banking institutions and other financial institutions. Uh, Plus, I think a lot of agenda for foreign institutions, which are technically the DFIs, which we call them, like the IFCs and the ADBs, as well as the sovereign funds, the DFIs of various countries of Norway, Denmark, and everybody. Their agenda is also to promote financial inclusion to a large extent. So that also opens up, funding for us. So I think that is probably one advantage which we get. But if it translates into lower cost of funds, I don't think so. That's there. That's not there.
Okay. Interesting. May I ask, what is your average cost of funds? Like, how much do you borrow at?
We are closer to about 11.50% right now, which
Okay.
used to be about 12% about 6 months back. So
And why has it become 11.5 from 12? Is there some macro environment change, or has
uh,
the credit rating improved for the business, or?
Yeah, that's exactly what it is. So it's all probably a function of the rating, which is there. Unfortunately, I think but that is what it is. So if your rating improves, definitely you will be having access to lower cost of funds. So that is where I think the benefits of microfinance don't kick in. Is just related to your commercial sense of getting a good rating, be it on the basis of your capital adequacy, be it on the basis of your credit cost and various other factors. I think that is where then everything which is more commercial kicks in, and that is the only way you can probably have access to lower cost of funds.
Hmm. Okay. Okay. So, what did you do to improve your credit rating? Like,
Yeah,
there must have been some. Yeah.
we got more capital. We were a little bit more profitable. So as I said, these are commercial terminologies which will kick in to give you maybe a better cost of funds. It's not that I've given 200,000 more loans to more women in a difficult area, and that's probably one of the reason I can give you a lower cost of funds. Unfortunately, it doesn't work that way.
Mm, okay, interesting. Uh, what is the benchmark? Like 11.5% as a standalone number doesn't. I mean, it doesn't give me information of is this a good number or not. Like, how much, say, Bajaj Finance? What would be their cost of funds? Like, the Bajaj Finance is the
Bajaj
largest lender
Finance,
in India, right?
you know, I,
Like,
I probably, but I don't know, they should not hold me responsible for anything, which I say. But
yeah, yeah, yeah.
ballpark figure would probably be, they'll be at least about 3% or maybe 3.5% down, lesser than us. So if we are at 11.5, they would probably be at about, my own sense is about 8.5.
Okay.
8.5,
A-
9, yeah, 8.5.
And this is a factor of their capital base or their profitability, or like.
It's they're a huge company. Capital base is big. Uh,
Mm.
the the
Too big to
terminology,
fail.
which carries, it's Bajaj versus a Singh, basically carries a perception of, you know uh, to have it,
Okay.
expensive.
Okay.
So I think, they carry that advantage, definitely, which is there, and maybe in the commercial structure and sense, they would have that advantage because they are far more. I think, they are far more robust, and they have huge reserves and capital. But I think, the differentiation between the asset class definitely should have some bearing on, how it probably should be looked at.
Mm, right, right, right. What is your capital adequacy ratio? So, capital adequacy ratio is your equity versus how much you've lent out, like your
Yeah.
AUM versus equity. Is that the right
Yeah, so
understanding?
capital adequacy means, the Reserve Bank of India actually specifies that we should have 15% capital adequacy. We are currently at about 28%, means that we have more capital than the statutory which is required. And that function probably is one of the key reasons why our rating probably has moved, after we did our last capital raise, moved from A minus to A, which gave us that advantage of maybe about a 50 basis point improvement in the cost of funds. So I said, it's all a function of, you have more capital, you are far more robust, which definitely is probably the right way when RBI and everybody looks at it. But I think, when we look at the asset class as such, and my own, that's my personal opinion, and I don't want to be hauled up for that, but this is what I say, it's what you deliver, and what, I think, how does it actually make a difference in the lives of people who are actually getting credit. See, when you look at it, if you look at different asset classes, my own thought process is, you're doing affordable housing finance and you're doing housing finance. Now, this why is this far more better? Because you're giving it to people who are able to have affordable homes.
Social impact. Yeah.
Yeah, when you're doing a housing finance business, I'm buying an apartment for about, let's say 5 crore, and you're giving me 2 crore out of that. Well, that's fine. But it's probably based on that. I'm improving my status in the society by getting a fancy apartment for myself. But over here, this is a need. So my sense is they should be viewed differently. Similarly, when you do microfinance and when you're doing a two-wheeler finance, I won't say two-wheeler finance, you're doing a car finance, or you're doing maybe a machinery finance, or maybe anything. They have their advantages. Definitely, it does help businesses as such. But if you really look at it, are we able to reach where probably it's very difficult for people to reach? Give them the banking, the banking services as such. We actually deliver banking services. You're giving credit to the underserved, underbanked, unbanked population. And the third is, which is very important for everybody to understand, is, see, we don't talk about women empowerment just by saying that we do it, we actually deliver it. So when we say that our company actually has given currently active loans to about 3.4 million women borrowers, means we have actually empowered every woman who's taken a loan from us to run her business or the household business, as well as try and see how the money will come in, how she's able to repay back, and whether it enhances the actual standard of living of their household or not. So I think, it's not just mere work. It's probably something, which really relates yourself to when you say that I do gender empowerment. I definitely do it, as compared to somebody who just, it's not a conference agenda item.
What made you passionate about this? How did you discover that this is what you want to do? Or, I mean, typically in my interviews of entrepreneurs, I've discovered that there are two ways in which a founder discovers and scales his business. One is through a series of accidents, and the second is that there was some large vision and passion which was driving him. Which of these two was it for you?
I don't know whether it was an accident or maybe it was destiny which was playing a part, on me. So
Mm.
so let me start my journey from where I actually was, and what did I do. So I qualified as a chartered accountant in 1984. Uh, this is ancient times. Uh, I did practice for about 6 odd years.
You
I
had your
used to
own
be
practice, or you were with somebody?
my own practice.
Okay.
So I was typically the first generation person coming into professional, coming into business. My dad was an IRS civil servant, and
Okay.
uh, and for him, he had one possible, I think, he gave me this advice, naukri mat kariyo. So for me, it was like that. I said, you're a civil servant. Why? He says, "नहीं यार, नौकरी मत करियो." So maybe for me, he was my rock star. So I said, okay, ठीक है, नौकरी नहीं करूँगा. Uh, so
Right.
I started my practice. So I think he was pretty happy that okay, fine. Ultimately, he listened to what I had said. Uh, and I used to be the internal auditor of a company called Shriram Honda Gensets. So they had just started manufacturing smaller gensets, for typically retail shopkeepers, small shopkeepers. Delhi used to probably have a lot of, this is I'm talking of 1990. They used to have a lot of power cuts. So practically power cuts used to happen for 6 hours, 8 hours during the day. Now technically, these guys started manufacturing small gensets.
So you were the internal auditor for Chiramonda,
So,
is
so,
where I
so
heard.
as my part of my practice, I was the internal audit for Shriram Honda Genset, and they had started manufacturing genset in India.
This was a Japanese
Small.
company.
Yes, yes. So they had a
Okay.
JV. The Shriram Group had a JV with Honda uh,
Okay.
gensets.
Mm, Sriram Honda. Got it. Okay. Yeah. Yeah.
So, so these guys, actually, and I used to be the internal auditor. So, when I was there in the company, so these guys said, we manufacture these gensets. We've gone to a couple of financials, and I think again, Citibank should not feel bad about it, but they actually went. I think Citibank used to be the only one who used to do consumer durables. So this came under that category. They refuse that we will not finance these kind of smaller gensets or anything. I said, can I do it? He says, how will you do it? I said, let me give it a shot.
The,
And he said, okay. But then I said, I don't have money. So he says, then how will you do it? I said, okay, let me at least form a company. And I went back to my dad. I said, I formed a company. And I said, can you give me about 50,000 rupees? He had just retired at that point of time. He says, okay, fine, I'll give you 1 lakh of rupees, but only with this assurance from your side that you will not turn back and ask for me anything more after this. I said,
mm,
okay, I'll do that. So I formed this NBFC. This used to be called Satin Leasing and Finance during
okay.
the starting of this thing. And
I assume in those days an NBFC license was much easier to get than it is today.
yes, yes, it was far, far easier. And to top it all, basically, we actually applied for a Category A license, and we got that Category A license, which means that I could take public deposits also to a certain extent.
Okay.
So that was a big one, but we never understood the significance of all that. So I formed the company, and as what I said, what would 1 lakh do technically? So I said, okay, fine, I'll finance your gensets, but you'll have to fund me basically for this. So I'm asking the manufacturer that if you want to get it financed, I'll do it, but then you'll have to fund me also. And these guys was really good. So I think they gave me a line of credit of about 5 lakh of rupees, which was pretty big at that point of time. And
Mm,
as would have it, as I said, it's like destiny playing a part. uh, I went to I was sitting, I went along with my friends to a pawn shop in the place where I used to live in. And you know I saw a black and white TV, running in his shop. And one guy came in. He actually gave him about $50, and said, and he said it, चल तेरी आखिरी किश्त खत्म हो गई, अब मेरा टीवी हो गया ये. So
yeah.
I got very curious, and I said, भैया ये क्या आप बोल रहे थे? कहते ये मैंने ना ब्लैक एंड वाइट टीवी 2,500 रुपए का था, ये मैंने इसको डेली कलेक्शन पे ये मेरे से रोज आता है, 50 रुपए ले जाता है, और मुझे 50 रुपए पता नहीं चलते. एंड आई कैन प्रॉब्ली
Mm,
this TV is now mine. Basically, I've given all my 50 days of installment to him with whatever
mm,
interest was there. So it's there.
mm.
And it struck me as if he can do it for black and white television for 2,500, the genset costed about 10,000 rupees. I said, let me try and do it for that. So I said, I'll start with a daily collection scheme for retail shopkeepers, and I'll also do collection on a daily basis. So I had a couple of people. Basically, these guys gave me that 5 lakh of rupees, and you won't believe it. Within 1 month, the stock was finished. Uh, and they said, this is marvelous. Our sales have actually gone up because of this. And the key catch was that a shopkeeper can pay actually 50 rupees on a daily basis for about 6 to 8 months. And it used to be calculated, and the genset was his. That is how we came into being as doing what we probably thought was just an asset class of doing hire purchase leasing, which is there. Not realizing that, I think probably this was actually laying the foundation of microfinance during that period of time. So
Microfinance typically works like this, like a small daily collection.
so it used to work like this.
Okay.
The manufacturer used to, through the dealer, used to give the genset to the shopkeeper. Our guy used to actually do the verification, fill up the files and everything. uh, Once that is done, the documentation is complete. My guy used to go every day to his shop, get that 50 rupees, and at the end of 6 months, 8 months, the genset would be his. The installments are finished, and on a 50 rupees daily basis, he's got a genset across over there. So that's how the EDI, which we used to call them equated daily installment, used to work. And it used to be very
Okay.
easy for anybody, any shopkeeper to do it. रोज का मेरा 5,000 का सेल है, 2,000 का सेल है, I'm just taking out 50 rupees, and the asset is mine.
Mm. And this is where you discovered productive asset. Like
Yes,
essentially, a
this
genset
is
is
where we
for a
discovered.
shopkeeper is a productive
Absolutely,
asset.
absolutely. So
Mm.
that's how the journey started. 5 lakh of limit which Shiramonda gave me within 6 months became 50 lakh of limit from there. Because the sales were just booming. Every shopkeeper said, "Mujhe ye lal wala genset de do." It used to be red. Birla Yama used to come
Right.
out with a Neela wala. So it used to be lal
Uh,
wala genset de do. And
okay.
these guys only had this scheme. The Birla Yama guys didn't have this scheme. So it used to sell like hotcakes. And five
How
lakh.
did the economics of it work out for you? Like, what was the margin? What interest were you paying, and what were you charging?
Interest to tab, I think it was all bootstrapped. It was coming from the company. This was practically free, and we used to
Okay.
charge about, if you look at it, about 20% flat, which comes to about
Mm.
40 odd percent. And we were profitable from day one. And
I didn't understand this. How the 20% flat turns to 40%? Can you explain that?
20% flat means that, if you look at the IRR construct for the whole year, basically you're regenerating the
Okay.
installment. So that 20% is not actually 20%, is actually 40% in terms of return, which you
Because
get.
he's paying you 20% over a 6 month period, so which annualized becomes 40%. Okay.
Exactly.
Got it. Got it. Got it. Okay.
So that
And
is good.
did you have NPAs, or what was your cost of
NPS were
collections?
pretty less. So that's where the family worked,
This
basically. So
productive asset.
yeah, yeah. So NPS were there. And interesting story again, basically. So how we started working. So I used to be somebody who used to look after finance, because my CA background. My brother had just finished his MBA, and he came in and he said, "Okay, fine, bhaiya, let me try and help you on this." He used to do the verification of the client. So the PD which used to be done by my brother, and
What is
he,
PD?
uh, PD, personal discussion, basically. So that's
Okay.
personal
Okay.
discussion means that you actually visit a borrower and you have a conversation with him, and try and understand
Right.
whether he'll be
Right.
able to repay or not.
Like some sort of a credit rating.
Yeah, 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 kind of a this thing.
Okay.
So he
Okay.
used to do that. And
Hmm.
my dad, since he had retired, he had nothing else to do. I said, why don't you go ahead? People who do not pay, why don't you go and visit them, and okay, fine, get some money out of them. I said, you use your government background and go ahead and do that.
Nice. Okay.
And my
Yeah.
my wife used to, she had finished her, when I got married, she was doing her chartered accountancy. Hopefully, she didn't clear. Uh, but Otherwise, then I would have had more of a this thing, both CAs in the house. Uh, but then she used to make our daily demand, so this is how much we should get today. This is the demand for today. This is which is
Mm,
due. This is the amount which has come in. This is not what come in. My father used to take which has not come in. I'll go and visit them, and so this is how it became a
mm.
family-run business. Maybe at the inception.
Okay, amazing, amazing. How did so how did this scale from being just the four or five of you into like into what it is today? Oh, how big are you today? What is your headcount like?
So for us, the parent company, the holding company is the microfinance company. We've got two subsidiaries, which is Satin Finserv Limited, which does MSME lending now, again in the rural space. We've got Satin Housing, again, which does housing finance as a USP, again in the rural space. We have our advantages because of our microfinance outreach. All put together in the microfinance company, we have a headcount of about 12,000 people. Uh,
Wow.
about SFL and both housing put together would be an additional 1,500. So we have, I think, in a total of about 13,500 to 14,000. That's
Okay.
what our headcount is.
Okay. Wow. Incredible. So tell me the journey, like of reaching this scale. You must have had like stages. What were those stages like when it moved from one level to the next level?
Yes, I think So this was like uh,
This was the first stage when it was like a family-run,
Yeah, so this was the
small
inception.
lending business.
This was
Yeah.
inception. So finally we started moving in from genset to two wheelers. So we started two wheelers again on the daily installment basis for shopkeepers. We moved into from two
Who was
wheelers.
giving you capital for two wheelers? That
Uh,
you were tying up with the manufacturer.
Beg, borrow, steal. So that's what we were
Okay.
category A. So the borrowers who actually used to take an asset, we started our pygmy deposit scheme from them. So okay, fine. And if you're giving me an asset, or if you're sorry buying an asset and taking finance from me, why don't you start deposits also with
Saving.
us? So
Right.
वो 100 रुपया used to give 100 rupees for his asset and 50 rupees there. ठीक है यार, your guy is coming in any which ways to collect money from me. Let me
Yeah.
give 50 rupees as a deposit for him.
Savings. Yeah.
Savings जो तो मेरे को at the year end, I'll probably get about 5,000, 10,000 rupees back with some interest component coming in. And the ease was that the guy comes to your place and takes the money from you.
Yeah.
So
Yeah.
that's how we started growing. Again, the whole process was we were profitable from day one. Uh,
You had no choice but to be profitable,
yeah,
right? There was no.
we had.
Yeah.
So even with our NPS, which used to be about 3-4%, it was still fine.
Which is very low. I mean, three
Very
four
low.
percent is very
On a
low. Yeah.
40%, 3-4%, was fine. Uh,
Yeah. Yeah.
and then from there, two wheelers to then, I think, then we actually came into real microfinance, without even understanding what microfinance was all about. So we started giving working capital finance to these shopkeepers. He says, I've taken a genset, I've taken a two-wheeler, maybe I've taken a TV or whatever it is. Can you give me and fund my business also, fund my stock and fund my working capital? I said, why not? Since we've seen 2 3 cycles of yours, we might as well start doing that. So we started giving out 20,000 rupees, 30,000 rupees, 40,000 rupees to these small shopkeepers for meeting their inventory requirement, getting in more inventory in terms of kirana ka dukaan hai to getting more inventory, and all that stuff. That is when real
And this
microfinance
was
started.
Delhi focused or like.
This was Delhi focused. This was Delhi
Okay.
focused.
Hmm.
This was Delhi focused. Again, uh, the terminology was we used to do a lot of activity. They say Jamna ke par. Jamna ke par
Yeah.
means in
Yeah.
east of Delhi. Now east of
Yeah.
Delhi was huge, huge. I think bed for small shopkeepers. So you had markets
Mm,
like Gandhinagar, Shadara, Usmanpur, and all that. Where you'll have these tiny, small retail shopkeepers, and it was dotted all across. Basically. So business was like if I had maybe 1,000 crore, I could have done 1,000 crore basically only in Delhi by just doing this. But
mm,
again, capital constraint and as well as this thing was always there. But
And
the whole
I'm
idea was,
guessing the density would have helped you because you
yeah,
would need less feet on street
yeah.
because all your customers are clustered together. So,
Yes. So my a single guy could actually do 200 installments on a daily basis. Can actually visit 200 shops. They were, one next to the other,
yeah,
the next to the other, and this thing, do 200, 200 and 250 basically on a daily basis. And that was probably,
amazing.
this thing, this is doorstep collection. Again, again, you're getting microfinance productive capital for enhancing your business, which no other institution was practically doing it. Not even the banks. Nobody will give you a 30,000 rupees unsecured and do a daily collection right at your doorstep. So it
Yeah.
really picked on and it was like when people used to hear this and look at it, the customer used to feel honest, this is crazy for me. So that's how we progressed from there. uh, I think the journey then continued. We were doing business, but again, this was kind of a small business. If you really look at the potential, where we are growing, we remain focused in Delhi. Finally, I think during this was 1990 when we started. 1996, in fact, 1995, we actually thought, how do we enhance now our capital? Because the business is doing very good. We've got into working capital finance. The demand is pretty good. Uh, so
What
we
was your AUM by that time? Or
we were about 5 crores, 4 5 crores,
okay.
5 crores, yeah,
Hmm. Hmm.
or maybe lesser than that. If I distinctly remember, we were about 4 odd crores, which was about 50 lakh of 50 70 lakh of capital, and about 2.5 crore worth of deposits, basically. So that is how we were probably able to
This
be
50
fine.
lakh of capital is essentially retained earnings.
Yeah, yeah,
Okay, amazing. Like from 1 lakh to 50 lakh through retained
yeah,
earnings is
yeah,
phenomenal. Yeah.
yeah. And we did put in some more money, basically. So I went to my father again, basically, and kept on crying in front of me. He said, "Okay, ठीक है. Take another 5 lakhs. Don't come back again." So I always used to go back again to him. He says, "ठीक है, यार." As long as he could see that his son is doing some good business, it's fine.
Yeah, 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 yeah. Plus, he was part of the
He
business,
was
so
part
he
of the
had
this thing. I know.
visibility.
Yeah,
Yeah.
yeah, yeah. But so 1995 event actually went that let's do our IPO, basically, because again, that chartered accountant brain, works pretty faster than, I think, maybe an MBA brain. So my brother could think about it, but I said, okay, fine, let's do this thing. We went to a merchant banker, and it was a big merchant banker, a large one, with a good pedigree. Uh, he said, we'll do your IPO, but we won't sell it. I said, if you don't sell it, then how do I make my IPO successful? He said that you're a very small company, we can't do it. We will not sell it, but you still want to do it. I said, he said, the fees is huge, enormous, and if they're not even underwriting it. What's the fun? We said, okay, fine. So we waited for another year.
I want some clarification here. A merchant banker is responsible for basically making investors aware and like
Yes,
onboarding investors that this company is
yes,
doing an IPO
yes,
and you should
yes,
come in
exactly.
and okay,
Yeah,
okay.
exactly. Underwriting
Plus
means
the
underwriting means
documentation and
documentation.
compliance.
Yeah,
Yeah.
documentation plus underwriting means that I will sell your IPO. Means I'll find
Okay.
retail investors or investors who will subscribe to that. So he said
Okay. So
that is part which
they
we did not.
guarantee that we will find investors or we will put in the money from our
Yeah.
balance sheet if we don't find investors.
So he says no.
Okay.
So he said, okay, fine, then there's no point.
And how
Uh,
much did you want to raise?
Uh, so we wanted to raise about 1.6 crore, sorry,
Okay.
1.4 crores. We wanted to do it on the Delhi Stock Exchange because Bombay Stock Exchange was 5 crore and Delhi was doing with 3 crore. So we can't muster 5 crore, so let's do 3 crore. And
3 crore. What is this 3 crore number? The
3 crore
total
would be,
capital.
so 1.6 crore the promoters were putting in,
Okay.
me and my family were putting in, basically. So I got hold of my dad and his friends and his relatives and everybody. He says, okay, fine. Uh, so he said, he says, my son is doing good. Let's all support him. That's fine. So and 1.4 crores was from the retail public as such.
Okay. Got it. Yeah.
Uh,
Okay.
then we said, if they're not guaranteeing us 1.4 crores, how will we sell it? So we said, okay, fine. Why pay such a hefty fees? Uh, We came back to the drawing board next year, 1996. We went back to a smaller merchant banker who again said the same thing. He says, I will not guarantee my underwriting to you, but I'll file the papers, I'll get you the clearance for doing an IPO. We said, okay, fine. Let's find ways and means of subscribing to this 1.4 crores. We said, okay, fine, let's go ahead, because it could probably give us maybe a slight further in terms of our business when we go across. And then we sat down again. He says, how do you subscribe it? So we said, why not? We've got in Delhi, we've got about maybe 20,000, 30,000 customers. Let's sell it to our customers. They have dealt with us. They have uh, done various assets with us. We're actually helping their businesses grow. So dealers, so we had dealers for two wheelers, genset, uh, everything put together, and even customers. I said, let's go and sell it to them. And you won't believe it. We actually, all my collection guys, all my loan officers, me, my brother, everybody, we just went and talked to each and every customer of ours. And we gave them, we said, okay, fine, this is the application form, this will come in, please subscribe to it. And as would have it, we underwrote our own IPO, and we could
Wow.
gather 1.3 times our 1.4 crores, basically. And we were on top of the world. We said, okay, fine, we could do it through our own means and without getting this thing. And the IPO got subscribed. So we finally had a capital of 3 crores, for us, and we got listed in 1996. So that is where,
How much would someone have made who invested at that time?
sorry.
Like how much would have been the returns for somebody who invested in your IPO?
Uh, Return, I would say probably
Like somebody who put in 100 rupees at that time,
so.
what would that 100 rupees be today?
So 100 rupees, I think in 1996 to 2000, I stock price from a 10 rupee climbed up to about 120 rupees.
Okay.
Yeah.
And what is it today? I mean,
Today
you
it's
probably would have had stock splits and all, but like,
no splits, no splits. The
okay,
capital base has increased, but currently we're trading at about 215 odd rupees. Basically.
okay,
Yeah,
okay.
we've touched a high of during our earlier days. When we actually shifted from DSC to NSA. We've done a high of about 700 odd rupees. Basically as
Okay,
compared to what it is. But that's again
okay,
a different journey which has been there.
okay, okay, okay,
So
okay.
that's how
So
we.
you
Sorry.
publicly listed in 1996. What's the next stage then? Like, when did you go beyond Delhi?
So 96 is we're still counting the same model, working capital for shopkeepers again, this thing. So from 1996 to I think 2004 is what our first uh, brush of feeling the first crisis happening for us. So 2004 is when RBI actually said, they were changing their norms and structures and the conditions and everything. In fact, so for us, we had to stop our deposits. Basically at that point of time. So
Okay.
2004, in fact, we
Like
had
RBI put in some minimum capital requirement or
yeah, so they
something.
had this, basically because they had a lot of scams and everything, which actually
Hmm.
people used to run away with deposited money, and I think probably that was the key reason why RBI didn't want smaller companies to probably look at it, and which was fine, I think. So we had to change our category, we had to change our license. So from a category A license, we went to category B. So that is when our first brush of returning depositors worth about 3.5 crore out of a total pool size of about 7 8 crores. We had to give
Oh,
it back.
okay.
Uh,
50% of your capital.
Gone.
Okay.
So
Hmm.
we had to return it. So we returned it in about a year or so. We returned each and every borrower of ours from our own resources, basically, and we still remain profitable. Our balance sheet size shrunk from about 6 7 odd crores to about 3.5 4 crores, but we were still profitable. After doing that. But the biggest part was that on a smaller balance sheet size, on a smaller this thing, we were still able to repay back our commitments, of depositors, which were there, and that was probably for me. It was personally a far more satisfying and enriching experience that I didn't actually default on that. I could repay back each and every depositor back, and that was my biggest win. to do
Mm.
that. So that's
Essentially, you would have had to stop giving new loans to
yes. So we
because you
did
had
that
to
for a
return
while.
capital.
We did that for a while, but then we went back. We went back to uh, a couple of banks. Again, the fallback was my father. So he said, "Okay, fine." I took away our own ancestral house in Delhi. I said, "Can I mortgage this and probably get a cash credit limit?" After a lot of persuasion and with maybe I had to probably shed a couple of tears which were genuine. I said I'll, I'll make sure that I do not let this house which you've built through your own hard means in being a government servant, I don't put it away maybe in that. So he said fine, okay. We got our first CC limit of about 2.5 crores, with that house of ours, basically. So
And
that was
CC
probably a
is
saving.
basically like a
Cash
overdraft
credit
limit.
limit. Yes,
Uh,
yes,
okay.
yes. Yeah.
Mm.
So we got that. And
Yeah, you said 2.5 crores.
yeah. So we had to refund 3.5. We got 2.5 crores from the CC limit. Back in business, with only this thought in mind that at some point of time I have to return this back to my dad. And he said, okay, fine. As long as you're doing it fine, I'm fine. Till that time, he had probably taken a back seat. He was just watching us and doing it. And moving ahead. 2005 is our next first bigger milestone. So we were doing, technically this was microfinance. And once this was going back, we probably were at our wits end, what to do, because you need capital for yourself to grow. We hired a consultant uh, at that point of time. uh, the consultant said, I have looked at your model, and I think you guys do microfinance, and that is probably the best way that you should position yourself, because then you'll get a lot of funding. Our approach was always very different. For us, whenever we used to approach a bank or anything, we says we are an NBFC. This is what we do, and the bank used to say we don't fund NBFC. Why don't you just go away? If you've got anything collateral, we can probably give you money. But if you don't have a collateral, we will not. So we mortgaged one collateral, but we got 2.5 crores. But the requirement was getting more and more in terms of our outreach and how we used to do it. So we went to Sidby. This consultant said, "Okay, fine. I'll take you to Sidby. I'll make a business model of yours, but you have to remember that you have to tell them that you do microfinance because you do microfinance." I said, "No, we don't do microfinance." He says, "Idiot, please understand what I'm trying to tell you. You do microfinance. Is that you don't understand the nomenclature of a microfinance. You're actually helping people run their business, and this is microfinance." So I said,
Mm.
okay, fine. If the consultant is saying and I'm paying him a good fees, he probably would be right, you know. And we made our presentation to Sidby in 2005. I remember very distinctly, very clear. This was March 2005, and we had practically lost all hopes. उसको पैसे दे दिए, सब कुछ वो दे दिया. He went with us. We did our presentation. And Sidby guys were so happy. He says, we've been trying to hunt for someone doing microfinance in North. We've not been able to find anyone. You guys do microfinance, we will fund you. So we went through that rigmarole of doing a rating, their due diligence and everything, fingers crossed. But we got our first ever check of 1 crore of rupees from Sidby, and that was my biggest point, that for the first time ever in our life, we had seen a check of 1 crore of rupees coming in as a debt capital, as a debt fund, for us, and that
Mm.
was our beginning of probably taking those smaller steps of becoming a little bit a bigger company from there. And
Mm. So this is still in Delhi when Sidby
this
gave
is
you
still in
this
Delhi.
1 crore.
This
Okay.
is still in
Okay.
Delhi. But
Mm.
yes, the moment when we got our first funding from Sidby in 2005, we expanded a little bit to Ludhiana, because Ludhiana was again somewhere where my dad, after partition, they had settled in Ludhiana. So he did his schooling and college and everything from Ludhiana. So for me, it was like repaying back to him and telling him, okay, fine, I'll do my next state, or next city to be Ludhiana, where you were probably spent the major part of your life. And I think that is somewhere where I got that satisfaction that, okay, fine. I've actually repaid back to him, but not giving him something, but at least honoring his I think legacy and journey, probably to see that, okay, fine, this is where it is, so that is where we had expanded beyond Delhi. That was my
And so Ludhiana was again shopkeepers,
again shopkeepers,
retailers,
same, same,
wholesalers.
same,
Okay.
same
Okay.
working capital,
Mm,
same,
mm,
yeah.
mm, mm. Uh, when did the customer category diversify into rural women? Tell me that journey, like
Yes, so
from
2005.
traders and retailers
Yeah,
to.
so 2005 is when we started getting money. So we were suddenly feeling, this thing. And let me tell you maybe an amazing anecdote. So when this consultant came in and he said, "Okay, fine, I'll take you to Sidbi, and I'll take you once. You don't require me after that." I said, okay. So when he was making the business projection and everything, he carved out, for the first year, you'll get about 10 crores. For the second year, you'll get 25 crores. For the third year, you'll get about 50 crores. And the fourth year, fifth year, when he wrote fifth year, basically, he'll get 100 crores. So me and my CFO at that point of time, who's our group controller, he's been there with me for about 24 years now. So when he was making these projections, so we were both sitting down across there, and he won't believe it. And I told him, let's go out. We came out and we kept on laughing. I said, this guy doesn't know we are getting a check of 1 crore of rupees. He thinks we'll get 100 crores after 5 years. What kind of funny? He says, don't worry, na. We paid him. We are doing everything. Let him write whatever he's writing. So what? I said, 100 crores. Jugul, can you understand? 100 crores. I've never seen 1 crore in my life. He's giving me 100 crores. He says,
Right.
sir, let's do it. Let's do it. But you won't believe it. In my even wildest of wild fantasy, I could never ever think, 100 crores ever for me. You know, that's how it is. I struggled for 1 lakh of rupees. I struggled for 50 lakh. I struggled for 1.4 crore of selling my equity shares in IPO. You know, somebody's just talking of 5 years and you get 100 crores. And I think he was right. We never could visualize that, we could get money also just because we were doing microfinance and we never knew that way. So for us, our baptization actually, we were born a long time back, but our baptization actually happened in 2005. So that is where I think the whole thing actually came on. So we moved in our journey from there. Yes, I think from Sidbi, we went to the other banks. Once Sidbi had given a loan, I think everybody then started coming in. And again, funny things used to happen, and we could never believe our eyes or anything. So we gave an application to ICICI Bank. And I remember very correctly. We gave them an application of about 1 crore rupees. They sanctioned us 2 crore rupees. I said, Jugul, ऐसा भी होता है? We given an application of 1 crore, they're giving us 2 crore rupees. Well,
Uh,
so for us, microfinance was like, the terminology became like a God sent, thing, which is there, and,
mm.
uh, and it continued. So I think, from a balance sheet point of about 6, 7 odd crores, 8 crores, we went down to about 40 crores in 2008. So from
Of
2005,
equity capital, 40 crores,
no,
or
debt,
you're saying total
debt,
book size?
debt,
Okay.
debt,
Okay.
debt, all debt.
But
So
you
the
would have
AUM
had
became
to
AUM became 40 crores.
increase. Okay. And 20% you said is what you need as capital adequacy, roughly.
15,
So
15, 15.
15%. Okay. Okay.
Yeah.
So that about 5-6 crore of capital that you anyway had.
Yeah,
Okay.
yeah, exactly.
Hmm.
40
Okay.
crores
Okay.
was actually, our balance sheet size. And
Hmm.
2008 is when we said we got our first equity investor in our life, and we had not heard about this animal, which was like an equity investor, So we got uh, an institution called Low Capital. Low Capital was they had made their first microfinance fund in India. This was run by Rajiv Lal. Uh, Rajiv Lal used to be the ex MD for IDFC Bank, and they discovered us. Uh, and again,
So
they said,
this was like a private equity fund,
this
low
is a
capital.
private. Yes,
Okay.
this was a
Yeah.
microfinance fund, the first
Hmm.
microfinance fund I think in India, and
Hmm.
they were funding only microfinance institutions. And microfinance was per se largely in South. North was like
Yeah.
completely devoid. We were practically the only company which was working
I think there
based
were a
on.
couple of big ones in Hyderabad, right?
Yeah.
Around.
It was all. So we had heard these names, SKS,
Hmm.
Spandana, Share Microfinance used to be there. These were larger companies basically, and they were doing all these JLG. JLG, methodology. Rural
What
women,
is that?
JLG, Joint Liability Group. So this
Okay.
was like the women will form a group in a village, and then we will fund them.
And the peer pressure would make sure that they pay back, because
Yeah,
if
peer
one
pressure.
defaults, the others will
Absolutely,
have to make
absolutely.
up for it. And
Absolutely,
okay.
absolutely.
Mm.
But we were still doing our daily collection, working capital for small shopkeepers. So in 2008, when we got our first investor, and it didn't come from them. We thought let's now foray into joint liability, the group model
How much
with
did
women.
this invest? This low capital. How much did this
I
fund
think they
invest?
invested about three odd crores. Yeah, about three and a
Okay.
half crores. Yeah.
Hmm. Hmm.
So it was a probably small this thing, but we were also pretty small.
No,
So
but 3 crore equity means your book size can increase
yes,
by 15
yes,
crores or
yeah.
so. Yeah.
Our book size can actually increase by, you could leverage it five times more. Your book size could increase by
Yeah.
another 15, 20 crores.
Yeah.
So
Right.
they
Hmm.
did a couple of rounds later than that also. So three actually became at the end, and I think they had invested about 8, 9 crores, into the
Okay.
company.
Hmm.
But 2008 is when we got our first investor, and as would have it, again, funny stories in this. We were actually
And
dealing with an equity investor for the first time.
okay, but you still had retail investors, right? You were like you were being traded in the Delhi Stock Exchange at that time.
Yes, we were, we were,
Okay. Okay.
we were.
Okay. Hmm. Hmm.
But the Delhi Stock Exchange was actually, deteriorating. There was no transaction, not much
Yes.
transaction happening across it. So price discovery had to be done, basically. So there was no
Hmm.
trading happening in these stock exchanges.
Right.
So we were like listed, but still the flavor was unlisted, basically.
Right. 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 Okay.
Yeah.
Okay. Hmm.
So 2008
How
is
much
when
did they value you at? Like, how did the
I I think that they took about a 10% stake. Maybe we were valued
okay?
about 30 odd crores, or so.
Hmm. Hmm. Okay.
And so 2008 is when we thought, let's do the group model, and let's do it from the most dangerous state, which could probably be there. Let's do it from UP. and
Okay.
uh, and we said, okay, fine, let's try in UP. If you can do it in UP, we can do it anywhere in India. So that was what the thought was, that if you could do it, and you won't believe it, we still had funding lines from various bankers, and I won't name them. He says, people have burnt their finger in UP. You want to go back to UP again? I said, let's try. This is how I've always lived my life. Let me try something, which is different, unique, and I'll probably take that call. That if we are not able to do well, then we'll probably look at something else. Beyond here. And as would have it, we actually went in with a very positive frame of mind. The first 100,000 customers in UP, we had even not even a 1 rupee delay or a default. And
Well.
that gave us that huge confidence that if we can do it in UP, which is again today our largest state, even after 16 years of our life, we feel that we probably have the courage, or maybe the insight, to probably look at it in a far more different fashion than anybody else. And that is probably from where we started our group journey of looking at microfinance in actuality from there. So that's 2008, from where we started.
Uh, so, so far when you were in urban areas, I'm assuming there is density and clusters, and so it is an efficient model. Like you said, one guy could do 200 collections in a day. How did the model change when you went outside urban areas, and how did you? So, I mean, even acquiring customers would be easier in urban area because you go to one market, you find whatever 50 traders there whom you can onboard. So, how did you change your model of finding borrowers and doing the daily collections and things like that?
So in fact, so we had to change from a daily collection to a weekly collection, basically, because either you do a weekly collection over here, the meeting happens every week, or you do a fortnightly, or you do a monthly, basically. So the choice was ours, probably, to look at. So we chose the bi-weekly model. We said, okay, fine, we'll collect every 14 days. And when we sat down, brass tacks, and to fine tune our blueprint, we found that inherent deficiencies in the individual lending model in the urban space. will probably give us that extra edge when we do the rural model with women. One, it was very gender specific. Financially, if you really look at it, I think women are far more financially more far more independent, far more
Disciplined.
I think disciplined in terms of actually repaying back as compared to men. Definitely, because men have what they say, these vices of gambling, alcohol drinking, and all that stuff. Basically, which probably does have a bearing on the repayment capabilities. The second was that for us in urban areas is you actually have to market yourself. You have to find a borrower. Over here, the moment you make a group leader, she has to find five other women basically and form that group. So for us, this was faster churn of acquiring a customer. You find one leader, she'll find five more. Basically for yourself. She'll find 10 more basically for yourself. So I think that was probably far more easier. The third, thing, which we actually found that there was a deficiency when we were doing the daily collection model. My guy could do 200 at a maximum, 200, 250 every day. But over here, one group, if it has 15 or 20 women, I do three of them every day. I'm able to do 60. Now, if
Yeah.
you extrapolate into doing 14 days or 10 days of repayment, you're doing 60 into 10, you're doing 600 customer per loan officer. So for me, the OPEX will definitely go down. The fourth was that definitely when you have a group, there is a peer pressure of everybody repaying. And if you're not repaying, then, you know, 20 other women will repay on your behalf, which will come to, let's say,
Yes.
maybe 10 rupees or 20 rupees per borrower, basically. So I think
Hmm.
these four advantages actually made us believe that this what we've done about 15 20 years of our life, this is now has to be put in the history books. And let's start this new journey of ours of microfinance with the women and the group model and this. And we started from there in from UP and then went on to different states across over there. But that's how then the journey started of the what people call it, the real microfinance. uh,
Hmm.
that's what it was.
How did you make the decision to lend or not to lend? Because when I've interviewed a couple of other companies in the lending space, most of them use, like, say, CIBIL scores and that credit rating and things like that, which I am sure would not exist for your borrower base. So how did you decide about the
So I,
decision?
I I think the journey started. So when we actually forayed into microfinance, I think in North was completely devoid. So that was we were literally like the first ones entering into the territories where probably they had never seen microfinance. So the initial euphoria and the initial thrust was not more on looking at the risk profiling of the customer. They were getting that money to run their businesses, which they had never ever thought they'd ever get in their lives. So the pressure on repayment was absolutely not from our side. And they had it was like a cookie cutter. Basically, you're giving them money, the money will come back for sure. You don't have to do anything. That I think was probably the first phase of microfinance, where this all used to work probably seamlessly. You give
So
them money and
the
the
key
money will
there
come.
was to, like, it was more of a
Reach.
sales led. Like,
Reach.
you had to
uh,
find
yes,
borrowers.
yes,
Uh,
the key
okay.
was to reach them. So
Mm.
that whole idea about outreach was probably far more significant, that you have to reach over that, and just give the money will come back.
And
I
how did
think
you hire these sales folks who were going out and
that
onboarding?
time that time I think it used to be a passion, for people to actually serve the
Uh,
women folk, serve the unbanked basically. So the guys who used to also be hired, they had that passion inside them. The way we had this passion, they had the same kind of a this thing. आज मैंने इतनी बहन जी को लोन दिया, आज मैंने
mm,
दीदी के साथ में उसका ये दिक्कत था, तो मैंने बोला कोई बात नहीं दीदी, आप मुझे आज मत दीजिएगा, you give it to me after 14 days, not a problem.
mm.
So that was probably the passion which was driving microfinance at that point of time. And that was probably, I think, the key to the success where it was. But again, I think 2008, this was probably short lived. 2010 is when we got our first crisis in microfinance industry, which was SKS in Hyderabad was going in for their IPO. and suddenly I think that Andhra Pradesh Act came in, and uh, practically the first crisis, which large scale crisis, which microfinance institutions were seeing, was in 2010 December.
What was that? I don't know the details of that
Uh, so,
act. What
so,
happened?
so technically, the AP government and majority was in Andhra Pradesh, and SKS and Spandana and Share were three large companies, and their major portfolio was also in Andhra Pradesh, So the AP state came up with an act that it was typically like banning microfinance. You could not do microfinance. The state got an act, even though the act continued for a few more years. But finally, I think the court verdict came in about a couple of years back, that you can do. It's not a state law, so that got validated. But the whole crisis happened during December 2010. Uh,
And this act was driven out of a fear that there was predatory lending happening. Was that the reason?
exactly,
Or?
exactly, exactly,
Okay.
exactly, exactly.
Okay. Hmm.
So that is where it was, because I think the key for microfinance is that I think people view it in very different fashions as such. We view it in a different fashion. I think for people who do not understand uh, the deep rooted intricacies of what microfinance actually helps to do. For them, it's why are you charging 20% from a women borrower? You gave them an answer that she was not getting a loan. At least she's getting it now. We've got a cost to deliver. We do,
Yeah.
banking services right at the doorstep. There's a cost to deliver. 50,000
Yes.
rupees. You have to run the operation, and you have to be profitable, Otherwise, you will not be able to go anywhere. So I think, people actually do not understand the dynamics, The third bigger point, I think, people tend to forget, is that we give employment to so many people across the today, for me to run this AUM, I need feet on street. I need my loan officers to actually have a meeting every 10 days. My loan officer has to actually go to a place where he has to collect that money, talk to that borrower, and do all that. It's a huge cost which is there. Whatever you might do it. It's a scale, definitely, yes, we give us that advantage, but look at the outreach which is happening, so all that thing which I told you earlier, empowerment, financial discipline, inclusion, and everything, we generally do it, but I think people tend to look at it from a different angle altogether. They feel, we're charging a high rate of interest, we should give them for free. It's not charity.
Yeah.
uh,
Right. Yeah.
but I think that's what it. So that's exactly what happened in 2010. I think this whole rigmarole came in.
But
Post
how
that,
did
I
this
think
affect you? Like, did you
the
did
business
your
stopped for
credit
everyone.
lines get
Yeah,
squeezed? Okay.
the credit lines got squeezed, but thankfully we were not in Andhra Pradesh. We were in North again. So our credit lines were still working fine. Uh, and I don't want to say it, but we are probably the only company which even grew during that period of life. But yes, it was a dampener for everybody else.
Hmm.
Microfinance got its first uh, I think norms and conditions by the Reserve Bank of India post this crisis.
Hmm.
So the first thing which probably happened is that rules came in that a borrower will not get money from more than two or three lenders. That was the first rule which came in.
Okay.
Like you cannot, five people cannot give money to a loan, so that over indebtedness is taken care of. Credit bureaus kicked in, which was probably the most biggest help and biggest I think takeaway from this crisis. Credit bureaus kicked in. So today, at that point of time, you could actually visualize that a borrower, how leveraged she is, how much she is under indebtedness, basically to look at, and then you can plan accordingly. And since the norms had kicked in of not two MFIs lending to a borrower, I think that was probably decent at that point of time for you to curb this over indebtedness. So I think that is how probably I think crisis leads to maybe far more rules coming in to adhere to these kind of things which would probably harm the business rather than help it.
Yeah, there's that famous saying, I think it's attributed to Churchill or something, never waste a good crisis.
Exactly, that is what it is, and that's been our mantra ever in our life. Always, never waste a crisis. Absolutely.
Yeah. Yeah. So, how did the bureau score start happening? Because these women wouldn't even have had a PAN card, right? Like,
Yeah, so you had to give the data to the credit bureau on a daily basis. not daily basis. It used to be monthly at that point of time. So
The
whatever loans
name,
they had,
address.
yeah. So this was very specific to microfinance. These bureaus came in for microfinance.
Okay.
Voter I card used to be the preferred. I think
Identifying document.
ID at that point of time.
Yeah.
Aadhaar had not kicked in, and
Right.
so we used to give data, voter I card, the name of the village icons and everything, and how much has she borrowed, and people could visualize. So if you're making a disbursement, according to the norms, if you're the third lender, you will not do it, So I think, bureaus were a big help, from
And you
20
have to give data of the entire group or of the group leader?
entire group, entire group,
Okay.
entire
Okay.
group.
Okay.
So every
Got it.
borrower is individually tagged across, so even though she's in a group, but she's tagged on an individual basis.
And typically, what would these women be borrowing for? Like, what was the use case of the funds?
As I said, agri and agriculture and allied activities, majority of them buying cattle for dairy
Okay.
farming. So you actually selling milk also. You're keeping some milk for captive consumption. That's one source, and this is like the biggest thing which happens across, and farming, vegetable mending, any small kind of a cottage industry or anything, which is there done. And you got clusters like you go to Agra, near Agra, you have all these shoe export units, basically. So you'll do shoe lowers, shoe uppers, bangle making, papad making, bandage, all that stuff also, along with, your agri and agri related activities.
Okay. Okay. Got it. Got it. When did you move to NSE from DSE?
From DSC, we moved to NSC in 2015.
Okay. And in 2015, it was still only microfinance, or had you also started home loans and the other
No, it was
subsidiaries?
just microfinance
Okay.
only. So
What was your book size by then?
uh, we would typically, in 2016, when the demonetization happened, we were about 3,000, 2,400 odd crores, basically.
Wow, amazing.
Close to about
So
two.
from you had that investor low capital that time I think you were about some 40-50 crores. So that 50 crore became 3,000 crore over the
No.
next 10 years.
So the journey was with investors. 2008, low capital came in.
Hmm.
2010, when the crisis happened. So always you learn from a crisis. When crisis happened in December, we got another investor in December. He said, now the crisis has
Okay.
happened. Let's get another investor. See, we got another investor in 2010. We got another investor in February 2011. So, we always thought whenever a crisis happens, please get in more capital because that will
Yeah,
save you.
right.
So that
Hmm.
has probably helped us,
And
across.
these were all like domestic funds or like what
No,
were they?
both of them were foreign funds.
Okay.
Both of them
Okay.
were foreign funds. One was a fund from the US, again, a fund which used to actually invest across the world in microfinance institutions. And
Okay.
the third fund, which we got in February 2011, was a fund from Denmark. This was actually Denmark's kind of sovereign fund,
Hmm.
technically, run by them,
Okay.
and they invested in February 2011.
And how much did you raise in these two rounds?
We probably would have raised close to about maybe about 20, 25 odd crores, or maybe 30 crores.
Okay.
I won't remember the exact numbers and stuff,
Hmm.
but yes.
Hmm.
But sufficient for us to take us to the next level of our life, basically.
Hmm. Okay, but that the 3,000 crore was powered by only these three investments, or there were more investments
Me
also.
and the promoters, basically.
Ah, okay, okay.
Yeah. So
Promoter
we did
means like retained earnings.
So we did to 2015 when, yeah, retained earnings plus for us, maybe, we did a QIP before we did a QIP in 2015 as well as in 2016 also, right before demonetization. QIP is like, again, an equity, this thing, to qualified institution borrowers, basically. So we did that also.
Okay,
So
okay,
the
okay.
capital raising was happening, simultaneously, side by
Hmm.
side.
Right, right. Because capital is like an input
Yeah,
for a lending company.
yeah.
Yeah, yeah. Okay, okay, okay. So you shifted to NSE. What was the next stage then? When did you diversify? You have these two subsidiaries also today. When did that happen?
So that again came out of crisis. So 2015 is when we actually went to the exchange. And I think, the initial year was pretty good. As I told you, we touched a high of about maybe 700 odd rupees, basically. Suddenly people said, you are rich, we still have a 35, 36% stake, I think, says,
What
and
was that stake worth at its peak when you hit 700?
I think I would probably have been closer to maybe about 1,000 crore at that point of time.
Wow,
Yeah.
amazing. Okay. Hmm. Hmm.
And well, I think money was not something which ever interested me as such. So for us it was always what more can we do for the business, and
Right.
that's how we moved. So 2015, 2016, November is when demonetization hit. That was like another full blown crisis, which came in, and it happened practically. We had just finished our QIP before that, so thankfully we got saved because we had raised, about 200 odd crores at that point of time from the QIP, and suddenly all hell broke loose, and specifically in the northern states, So UP was going to polls in March 2017. Uttarakhand was going to polls in 2017, and Punjab was going to polls in March 2017. And demonetization happened in November 2016. And you won't believe it, from November 2016 till March, April, there's absolutely no currency in the rural villages, new currency, which could probably actually give my borrowers a room for them to repay back. They used to say, सर खाने के लिए पैसे नहीं है मेरे पास, नया नोट नहीं है, मैं खाने के लिए पैसे नहीं है मेरे पास, मैं आपको इंस्टॉलमेंट कैसे दूंगी. And we could understand, that. And as would have it, for us, we were the portfolio at risk, which you call technically, which could actually go bad, was about close to about 70%. So out of that
Yeah.
2,600, 2,700 we were, uh, or 3,000, we were practically 70%, means about 2,100 crore. We were actually in this thing that if we lose that, and with a capital base of what, 683, I remember correctly, 683 crore was my capital base, and 2,100 crore was at uh, hanging on a cliff for it to go bad, basically. And
Hmm.
I, in my wildest of my wild dreams, could not even fathom that how can 683 crore be able to actually, take care of that 2,100 crore, which was getting into delay or default, So that was the big one.
This must have also crashed your stock price, like when this happened.
Yeah, it started from there. The whole journey started from there, of looking at double digits, as well as now. Thankfully, it's a triple digit. Basically, it's fine, But we've seen double
Oh
digits also.
wow.
We've seen
Oh
double
wow.
digits also. But yeah, that's from where the whole I think started. I think people thought that we will not be able to come through, but as would have it, God's always been very kind,
Did
and we
you believe
always
that you would come through?
I always believed that we would come through. For me, I've never ever, and that's how I actually work. I've never ever taken anything which will not work. I know that me and my team, we have the capability of taking on every crisis head on and finding a way out. That is what I think it probably has kept us going across without even a solid parentage behind us, or maybe a large fund behind us. We've been able to do it, only on our own, basically. Grit, resilience, nimble footed, strategizing, thinking, experience, legacy. You might call it anything, But I think, that is how we pull ourselves through, from there, So Demon was like
Amazing.
the biggest one.
I
And
I guess you would have somewhere known that this 2,100 crores, which is classified as at risk, is a compliance requirement, but you knew that this was not really at risk and they would pay back when they could.
Uh, I had that feeling that I have to get it back. Now, technically, you can't actually predict a consumer behavior. Now, when a borrower is telling you, "I don't have money to actually, eat my food," how do you think that I will be able to repay back? And the second thing which happens, there's a period. So, if a borrower hasn't paid you for, let's say, 6 months, that habit starts forming.
Right.
I haven't paid you for 6 months. My loan tenure is 2 years. I've actually defaulted, not giving you. I can't pay you the entire amount in the next 6 months.
Hmm.
Plus, once I get into that habit, it's how the consumer behavior works. Once I've
Right.
started not paying you, basically, that gives me a far more better reason for maybe not giving you the next ones also. So I think we had to battle all that. We had to battle negativity. We had to battle perception from every stakeholder, the bankers, the investors, the peer pressures, as compared to what us, and I can remember very correctly, the larger microfinance institutions which were based out of South, and we were practically the only one, the largest hit in the North. The difference between us and them, our 70% of our portfolio was down at risk. Theirs 25% was portfolio down at risk. That's where the difference was. And that's where the
What was
math
the
was different.
reason for the
North,
difference?
North basically devoid of new currency coming in. Currency you could
Oh,
see it in metros. Currency you could see it in South, but
okay.
I don't know why that currency was completely missing from these northern states. And that was hurting us the most.
Okay.
And that's how probably we were able to do it. Now you had to get out of that crisis. We made our teams, the boys gave in 100% of their energy, life. We did, we were working 17 hours, 18 hours. I used to call up each and every loan officer of mine, motivate them, go sit, किसी तरह वो बहन जी दो पैसे कुछ नहीं है. This was on the borrowers front. From our side, on the corporate side, we went and raised capital from Asian Development Bank during that period of time. He said, get in more
Okay.
capital, as what our theory is always to do it. We got an Asian Development Bank. I put in about 100 crores worth of my own capital into the company at that point of time. So we were able to take care of about 200 odd crores across over there. One of our very, very, I would call him technically our mentor, which was IDFC First Bank, Mr. Vedyanathan. He used to run an NBFC called Capital First, and he said, and I asked him basically, can you give me sub debt of 200 crores, basically, and that gentleman looked at our balance sheets, everything, and he made that happen. Basically, for me, I got that 200 crore worth of lifeline for us to pull through between from our 2100 crore down to this thing. And by doing all these measures, my boys, the team, I think putting in more capital. Special mention, I said, Mr. Vedyanathan actually really gave us that lifeline for us to move forward. Uh, we were able to contain from 2100 crore, we finally lost about 350 odd crores. That is
Okay.
where the whole resilience and our whole thought process and our nimbleness actually came into being.
Mm, Th- Though even 300 crore is a large amount, right, of
Yeah.
losses too. It would have probably wiped out a couple of years worth of profit.
Yes, it did. But we made about I think after that we made some profit. Before that we were making profits, but yes, a couple of years actually went into losses. We had to pay a price for that. Definitely yes. But that's how it is.
Yeah, 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 yeah. There's nothing you could have done. I mean, it's
Nothing.
just macro
Absolutely.
factors. Yeah. Mm. And when did the new subsidiary start?
So subsidies came after this. So when we thought that microfinance is unsecured, let's foray into secured lending. That is when SFL was born. That is when Satin Housing was born. And we
SFL is MSME
MSME,
lending. What,
secured.
working capital or okay?
Yeah,
Like
working
against
capital
what kind of
secured
asset?
against collateral of any immovable property.
Inventory.
Yeah. And
Okay.
similar for housing finance, this is again immovable property for funding the housing
Immovable means homes and what all is there in
homes and everything. But it's rural
land
focused
homes.
again. So
Okay.
it's like your homes, your uh, tract of land, your this thing, in the rural
Okay.
space.
Okay. 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 And what is their book size of these two subsidiaries?
So housing finance is closer to 750 crores,
Okay.
and SFL is close to about 500 odd crores.
And what is the total group book size?
12,000 crore.
Okay.
So the
Amazing.
balance is
Okay.
microfinance.
Okay. 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 Uh, what is the Do you feel that you're fairly valued by the market at your current stock price, or are you undervalued, or what's your take on it?
We've been an underdog throughout our life, so we definitely will be undervalued.
Okay.
We'll always be.
What do you think is the reason for that?
Oh, well, if you really ask me, frankly, uh, it will sound very controversial. But yes, that's how I am, and that's why I think, people also do not give us the standard fair value. Uh, but yes, I think, what we lack is probably a parentage. I think that is where I think perception works to a larger extent. Though we've weathered, I think more crisis than anybody else in our space. But I think maybe a parentage does make a difference. We are not owned majority by a large fund. We're not owned majority by a large business house. It's this uh, guy who's come across maybe in his life by putting small pebbles across and trying to do open. I think that is where I think we probably lose the battle to a certain extent, and I think the other I know. I think that is probably one of the key reasons why we probably have to struggle much more harder in our space, rather than to look at it. And if I can probably look at the space stock price, we're probably the same as maybe anybody else, same size of ours, but we trade at about one time our book value, but somebody else would probably trade at about 1.8 or 1 point the same. So that's I think maybe the difference lies
This
there.
you're comparing yourself with other MFIs or other
Yes.
NBFCs?
NBA,
Other MFIs.
MFIs, MFIs, only MFIs.
Okay.
Sector
Okay.
specific, same business
Mm.
model.
Mm. Which are the MFIs which have some sort of a backing of a like either an investment by a bank or a corporate house or something?
I think everybody else excepting us.
Okay. Okay.
And
Okay.
I won't take names, but yeah, it's everybody else excepting us.
Let me wrap up with one last question.
Yeah.
Uh, you know, based on your decades of experience as a founder, what advice would you like to give to young people who are listening to the show who maybe aspire to build a business the way you have? Is there any advice can you distill your 2 decades experience into a couple of like pointers and advice?
See, I think a couple of things which I've always kept at the forefront of my life. Is never take a shortcut. I think we've never done that. Never ever tread the hard way, but I think you'll never take a shortcut. That's one which we follow very diligently. Me and my team, we just follow that. And I think the second is, don't give up. I know there have been times where we've been beaten like anything, and it's been innumerable number of times, beaten like this thing, but we don't give up. I think that's where I also probably put myself there. I've never given up. You put me down. As I told you, Demon, it was like curtains. For me, everybody thought this company will not be able to come back. But we did come back. Because we had that faith. The team had that faith. I had that faith. That we'll come back. So I think these two are very important points for us to probably be where we are right now, basically, in spite of the fact, whatever perception we carry, I don't care about that, to be very honest, but for me, this is what we've never taken a shortcut. We've always gone the hard way, and we have always made sure that we come out of anything or everything from there, therein. I think these two probably have really helped us to be who we are and where we are.
Amazing. Thank you so much for your time, HP.
Thank you so much. Thank you, Akshay. Thank you.